please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This 10 years since the powerful investment bank Lehman Brothers filed for bankruptcy.
Whether Lehman had been bailed out or not, the crisis was going to unfold.
I think the hardest thing was just trying to figure out what would work. What could we do?
In the days that followed, global financial markets lost 60% of their value.
With more leverage, less equity, more optimism about the future, turns out the future wasn't as rosy as the past.
Is the world any safer now? And what did it feel to be at the helm of policy making in those dizzy days?
I sensed that they were worried that there is a problem, and they are worried that they'll make a policy mistake by doing something about it.
I would not say that the Reserve Bank saw a crisis of this magnitude.
Nobody quite knew whose balance sheet was going to go next.
Okay, 10 years since the collapse of Lehman Brothers, one of the big investment bankers, too big to fail, it was called, of course, and that was the last time perhaps you heard of that phrase. Things changed after that, for worse for a long time, and after that for better. And of course, as things stand, 10 years now, for a long time. This is Bazaar Morning Call. I am Anuj. With me is Sonia. We're missing Lata today. And Sonia, this also means that you've completed 10 years at CNBC-TV18.
Yes, I have. You know, I remember the day I joined, Lehman collapsed.
Yes.
And there was chaos across the world. There was chaos in the newsroom as well.
Yes.
And I thought, oh my God, I'm never going to be able to last in this environment. You know, what is this? All hell breaking loose.
Yes.
But as you said, onwards and upwards, we are here today.
Oh, yes. And of course, you know, chaos is the best time to buy into equities. But of course, you know that only with hindsight. At that point, you don't know what to do. But I missed you on Wednesday. We had a big rally on Wednesday, Sonia, both in equities and in currency market. And the fear of God was finally there in the bears, and that's why you saw that big scare. As we discussed, we needed something to scare the bears. We got that on Wednesday. Let's see if that can continue today.
Oh, absolutely. So are we going to be having grilled bear for lunch? I mean, that's what it looks like, right? I mean, we did see that short covering rally on Wednesday. And even if you look at the cues this morning, Anuj, most of them, there are a lot of positive cues, right? Oil has fallen, global markets are stable, trade tensions have eased a tad bit. The dollar is at a 1.5-month low. And even if you look at the macro data in our own markets, I know it's backdated, but inflation also is lower than what it was last month around, and food prices have fallen, etc. So we have that Prime Minister's review tomorrow. That's on Saturday. We did see a rally already. You think there could be more on the cards? Because I remember you're saying very well, the scared bear is the biggest bull.
Yeah, I think that's played out. You know, Sonia, it's, the human mind is such that, you know, we tend to look at the positives on days like today, and we tend to look at the negatives when everything is falling apart. So today, you know, you're only looking at the positives, not looked at the fact that there was big selling by FIs once again on Wednesday. And that was normal because, you know, if you sell at 11,200, you would sell at 11,300, especially if there's a, you know, currency tailwind as well. You know, this has also coincided with the emerging markets also seeing a bit of a recovery. Yesterday, Hang Seng was up. Today also it's up. Because if you look at the context, this month it's all about emerging market problem. MSCI Asia ex Japan 4.7%, emerging market 4.5%, India 4.5%. So it's not that, you know, we have done anything out of ordinary. You know, the point we discussed on Wednesday in closing bell is, did the government announce anything? No. They just talked up the market, and that was enough. You know, there's a difference between saying that let the rupee find its own level, we can't do anything, and saying that, okay, I think speculators are having a field day. Let's just remind them that, you know, there can be a bit of an intervention. That much was enough for a 120-point rally on the Nifty, and the rupee, in fact, intraday almost rallied 1%. Though towards the end, it again lost some ground. The SGX Nifty is indicating a 70-point gap up because you have to adjust for yesterday's move also. So combined that 70-point gap up after a 120-point rally from the low. So you're talking about, you know, in a 3-hour trading period, about 200-point Nifty move. That is interesting. After that, what do you do? Because my sense is on Wednesday also, the market didn't even give you a chance to take fresh long positions. And this morning after a gap up, there's a chance of further short covering, especially by the weak bears. The weak bears would run for cover. For the strong bears, I think they would be waiting for this move to fail. If this move fails at some point, I think towards the end, around say 233, then shorts will come back with a vengeance. The level that I'm watching out for is somewhere around 11,500 on the Nifty, which was the erstwhile support for the market. It's now likely to act as resistance. It's also the 20-day moving average, though it's unlikely that, you see aggressive shorting today ahead of that planned meeting.
Yeah.
You'd want to see that play out and then, take a fresh call perhaps on Monday.
Also, there is also a high likelihood that nothing concrete is announced tomorrow. It's just a review meeting, and then the bears come with full force on Monday, right?
There's a 95% probability of that happening.
Yeah.
In fact, and that is why I believe that 230 to 330, the strong bear will not wait for the weekend. He would want to take shots between 230 to 330 today. Yeah. The overall texture is weak. A lot would depend on the emerging market as well. Because if emerging markets, rally and have put a bottom in place, in that case, even our markets will rally. So let us see. We'll keep one eye on the emerging market index, and we'll keep one eye on what's happening in New Delhi. But after today's gap up, especially with the kind of rally that we've seen, today could be about some more short covering, incremental short covering, especially on the bank Nifty, which remains weak. And once again this rally fails, there's a good chance that you see fresh shorts entering. But today, at least in the first half, I think the field perhaps is clear to try on the long side. Purely on short covering.
Okay, so that's for the very immediate term, right? But Anuj, as the old adage goes, you should look for opportunity in adversity. Our good friend Ridham Desai has, gone by that adage. He's in fact scaled up. Morgan Stanley has raised their Sensex target to 42,000 by September of 2019. That's a one-year forward target. I know people scoff a lot at these, brokerage reports, etc. But he talks about a pickup in earnings and how he's sort of betting on that.
Yeah. I think, I have a lot of respect for Rhythm, and of course, if he's making this point, then you have to take this on board. And, look, nobody is debating that we are in a bull market. We are. And, especially for India, the way earnings have bottomed out and the way they are picking up, the micro is in place. The only headwind for India and the big headwind is in terms of macro, the combination of crude and rupee. So that way, I think... if you want to be a betting person, perhaps you would say that you would want to take that bet that 1 year from here the market would be higher than lower. It's just that in the near term, in the medium term, perhaps the market's going through a bit of a turbulent phase. And normally, when this kind of turbulence comes in, it takes time. So the next 15 days, 1 month, I think is going to be volatile. But yes, long-term texture, I think nobody is debating that.
Okay, yes, long term. We have come a long way since the Lehman crisis. We've also come a long way since the first iPhone was launched way back in 2007, right? We have another iPhone that recently got launched. We'll talk about that. Very interesting there, the pricing, etc. But on that note, let's kickstart the show and let's tell you what our wise experts have to say as we head into trade this morning. Just to give you a little more detail on Ridham Desai's note, they say the broader market performance means that investors should choose price underperformers with improving earnings outlook and finally broaden their portfolio by adding small caps and mid caps right now. He expects a macro trade to ensue, implying higher correlation across stocks. He raises their BSE Sensex target to 42,000 by September 2019, implying an upside of 11%. Ridham says a delay in earnings growth recovery is one of the key reasons why investors are not feeling bullish on Indian equities. He thinks this is likely to change as growth picks up in the coming quarters. In their focus list, they are adding SBI, Prestige and Apollo Hospitals and removing Infosys, Havels and Z given the recent Morgan Stanley analyst downgrade.
Let's get you some money market views as well. Bhaskar Panda of HDFC Bank says globally the dollar has lost some momentum based on lower than expected US CPI reading and optimism on trade talks. And the euro was higher on ECB Chief Draghi's bullish comments on the state of the European economy. He says this will provide a breather to the emerging market pack today. Bhaskar says a possible review of the economic situation, including a free-falling rupee, is likely, and a combination of all this positive news would boost the INR. Bhaskar expects the dollar-INR pair to open with a gap below the 72 to the dollar mark and trade within a range of 71.50 to 71.90 for the day.
Okay, and on the bond market, Bhaskar Panda says a stable and stronger dollar-INR will help fray ruffled nerves of the Indian bond traders. He says benchmark yields could move lower despite expectations of a rate hike. He expects a 10-year benchmark bond yield to trade in a range of 8.05 to 8.13% for the trading day.
Okay, let's talk about the global cues then. Here's Nigel with the world view.
Well, the U.S. markets, they ended with good gains in yesterday's trading session. Apple was the star out there. That ended with a gain of more than 2% odd on the back of unveiling of those new phones. Well, so that was a big gainer. But you're looking at some economic data, and the inflation data was a tad bit lower than what the street was working with. Some part of the street was fearful that interest rates may come at a rapid pace and faster than expected. So that's what cooled off some fears. Nonetheless, this month, in fact, almost the entire street out there expects a rate hike is definitely on the cards. The U.S. markets, though, they came off the high point of the day. President Donald Trump was at it again. He said they don't necessarily need to make a deal with China. Well, in fact, but he said that China, they are under pressure and they need to make a deal with the United States. So that's why we did see the U.S. markets come off the high point of the day. When you're talking about trade war fears, you're tracking two stocks. One is Caterpillar and Boeing. Both of them ended with gains of around 0.5% on the back of 1.5% to 2% gains. So the last two trading sessions, they're up by around 2.5% to 3%, telling you that, in fact, the street is fairly comfortable when these stocks end in the green. Shifting focus to the European markets, it was a mixed bag out there. Auto stocks did well because there is hope that the United States and China, they'll in fact come to the negotiating table and they can strike a deal. So on the back of that, auto stocks did well. But yesterday was the day for some of those central banks. The Bank of England, they left things unchanged. Even the ECB left things unchanged. But the Turkish central bank was something you were looking at. They hiked, in fact, their rates to around 24% odd. We saw a rally in the markets as well as on the Turkish lira as well overnight. Shifting focus to the Asian markets, most of them trading in the green. In fact, there's hope that there could be a deal coming about between the United States and China. The Shanghai market, though, a relative underperformer today. We have to track Brent crude prices, and the good point is that, in fact, Brent crude prices have come off a tad bit from the top, and the dollar index as well has cooled off to around 94.5 odd mark. SGX Nifty celebrating that, believing we'll start off with a gain of around 40 to around 45 points.
Okay, Nigel, are you going to be buying the new iPhone? I mean, they're calling it cheap, but it's still what, almost 91,000 for the 256 GB?
Sonia, for sure, not me. You know, I've got some responsibilities coming my way, so no chance, at least right as of now.
Okay, our responsibilities are done for the time being. So are you going to be buying the new iPhone? You're very anti-iPhone, right?
No, it's not about anti-iPhone. I think iPhone's accessories cost more than my phone. You know, the Xiaomi phone, and Sonia, 13,000-14,000 rupee phone. I think my basic premise about the iPhone is it's a great phone. It's a great company. It's a great product. So the phone comes for whatever price. 30,000 is the value of the price. Yeah. The rest is your ego. That is my way of describing the iPhone. But then, of course, you know, everyone has their choice, and of course you are a great iPhone fan, so I'm
but
sure
you know, I think I'll have to chop one arm or one leg to buy the new phone. They're calling the cheapest phone the XR. I mean, if for 256 GB you're still paying what, 99,000 for the phone. I mean, you know, that's not cheap by any standards. At least not with the way the rupee has headed.
Not cheap by my standard, but by your standard, perhaps it's still cheap. But yes, I mean, no. It's you know, as I said, it's a great product and it can charge a premium, right? Obviously, I think perhaps the only company that can charge this kind of premium on its phones. Absolutely. No debating that it's a great product and a great company, but it's just that perhaps, you know, I'm not willing to pay that much.
Oh, and there are many iPhone loyalists across the world. So, well, no two ways about that. But let's do one thing. From the iPhone to the other iconic event, right? What happened 10 years back. 10 years ago, on September 15, 2008, America's fourth largest investment bank, Lehman Brothers, filed for bankruptcy with total debt of $613 billion against total assets of around $640 billion and 25,000 employees worldwide. This is what really led to that big global financial crisis spiraling across the globe. 10 years on, here we are, and here are some thoughts from the key players at that time. Here are Jamie Dimon, the CEO of JP Morgan, who confesses to CNBC's Andrew Ross Sorkin that the great financial crisis would have unfolded even if banks had bailed out Lehman Brothers at that time. Listen in.
Whether Lehman had been bailed out or not, the crisis was going to unfold. The leverage was there, the repo was there, there's a lot of losses in mortgages, money was sloshing around the world, government started to guarantee deposits, which actually made it hard for banks. So it was going to unfold anyway, whether they went bankrupt or whether they were bailed out. And whether they went bankrupt or bailed out, as people realized the severity of this problem, which we just told you, a bailout would have told you the same thing. There's something deeply amiss in the system. you still would have had a very bad market afterwards. It just would have unfolded slightly differently.
So you don't think that exacerbated the crisis?
It might have, but it would have happened anyway.
Fast forward the next day, all of a sudden AIG is being saved.
Yeah.
Was that the right decision?
I think the way I kind of look at this is a little different, which is they did the right thing to do a lot of different things to try to ameliorate the problem, which would have been devastating for the average American. That they did. You can talk about each one and say, was that right, was that right, was that right? But what was right was they kept on doing it. So in hindsight, I can go back and look at any ones I might have done it slightly differently, I might have done this, but again, I don't think that was going to stop the crisis.
Okay, let's take a break on that note. Let's look forward and tell you what are the stocks you need to be watching as we head into trade this Friday morning. Our list of top 10 stocks when we return. Stay with us. Hi, welcome back to Bazaar Morning Call. This morning we wake up to good cues across the globe. So the Asian markets, most of them are holding up in the green. Trade tensions have simmered or receded across the US markets. And there are now reports suggesting that Washington officials have reached out to Beijing to restart trade negotiation. Let's see how that plays out. For now, things are looking fine across the globe. Our research team is here to give you the list of top 10 stocks as we head into trade today. And there are plenty to talk about. Anuj, what are you looking at?
So, two stocks, Sonia. First is Bank of Baroda. I mean, I was asking myself a question, is the market sensing something here? Because on Wednesday, the stock was down 5%, while the PSU Bank Index ended in the green. This one ended at the lowest point. Has underperformed PNB and Canara Bank by 6 to 7% this week. The 2.6 times jump in delivery volumes. Some heavy-duty selling going on in this stock. So, I would want to see what's happening here. BPCL perhaps could be on the upside today. The combination of weak Brent and strong rupee, that I think is likely to be good for oil marketing companies, and most of them are very close to their recent lows. So there's a chance of a short covering bounce in some of these.
Okay, so we'll watch out for these two stocks, the PSU stocks that is. But Sun Pharma could be one of the stocks of the day. Ekta joins in to tell us why. Ekta?
Well, yes, big news coming in for Sun Pharma as well as Spark, which is their R&D arm. They have received approval from the US FDA for Zelpros, which is basically an ophthalmology product, which is in the specialty pipeline of Sun Pharma and has been produced by Spark. So Sun Pharma has in-licensed it from Spark, and it is going to be manufactured from the Halol facility. Now, why is this important? Is one, because it negates concerns from the Halol plant, which received 6 observations just a couple of weeks ago, and this was probably because of a Zelpros inspection undertaken by the US FDA. And secondly, it is also adding to Sun Pharma's specialty pipeline, which is already got a couple of drugs in the pipeline. So this adds to that, and they could make around $50 to even $70 million in terms of peak revenue from this particular drug. Plus, adding to the specialty pipeline, it sort of differentiates Sun Pharma from the rest. So very positive news coming in for them.
Okay, Ekta, thanks a lot for that. The Sun Pharma stock on Wednesday, of course, had a big rally. So let's see. But from the recent highs, it's corrected a bit after that inspection news. So is there some space for Sun to rally? We'll find out. But interesting developments on Federal Bank and also perhaps Shriram Transport, which could well be the stock of the morning. Abhishek will tell us about both these stocks.
Well, to begin with, Anuj, margin call on the credit facilities availed by the MD and CEO, that is Mr. Shyam Srinivasan, has been hit. And this credit facility was availed by the MD and CEO on account of the ESOPs that were allotted to him. So 2 lakh shares were sold, and this forms about 4.1% of the equity that was allotted to Mr. Shyam Srinivasan. So as on FY18 or March 18, Shyam Srinivasan held about 48.8 lakh shares, forming to 0.25% of the equity of the bank. Coming on to Shriram Transport, Credit Suisse has maintained their neutral rating while they have lowered the target price to 1,250 versus 1,500 earlier. The SVL Limited, which is the group's non-financial NBFC, has actually gone on to bankruptcy process on September 10th. So the guarantee was given by Shriram Transport and Shriram Capital for the debt that this company owed to its lenders. So SVL will lose the control over the assets and operations due to the IRP professionals taking over. So provisions can rise as Shriram Transport will have to make provisions over there. Therefore, Credit Suisse has cut the target on growth and EPS. On EPS front, they have cut the target by 8 to 17% over FY19 to 21. However, this news was expected by the street. We saw Shriram Transport hitting 20% lower when there was an anticipation of this news in July. Back to you.
Oh, absolutely. And when we reached out to the Shriram Group chairman, they did indicate that the parent will support, SVL and the extra provisions that have to be made. Let's see, now that they've been admitted to NCLT, let's see how what the reaction is from the chairman. But for now, let's move on and talk about some more stocks that are in the news. Anisha is with us to give us more. Anisha.
Hi, Sonia. Good morning. I'll start with Voltas that has launched its range of home appliances with the Beko. Now, remember, they had announced this partnership with Arcelor last year in May, and the expectation was that the products will be launched by last Diwali. Now, it's been much delayed, but the positive news is that they'll be able to ride out this festival demand season. Moving on to Engineers India, wherein the board is considering a proposal to acquire 100% stake in another government company, so that might see a bit of green tick. And there's a similar story for NBCC as well, wherein they have been selected to acquire 100% stake in HSCC for around 300 crore rupees. This has been going on and in the works for the last year as well, but the order book of this company is good and they're paying just around 300 crores, so it should be taken positively.
Okay, thanks a lot for that. So, a whole host of stocks there that we are looking at this morning. Of course, stocks like Sun Pharma, Shriram Transport, etc. will be top of mind. But there are plenty of other stocks that are in the news, so do keep an eye out on that. Sonal is here to give us that list. Sonal?
Good morning, Sonia. Well, the first stock that I'll talk about is SBI because the bank has put up around 8 accounts which has an outstanding amount of around 4,000 crores for sale to ARCs, foreign institutionals or other banks. The other stock that I'm watching out for is Maruti because the company has informed the exchanges that it has increased the production of Baleno to cut down on the waiting time. And in the last 8 months, the production of Baleno has increased by around 34%. So that is something that I'm watching out for. Jain Irrigation will also be in focus because the step-down subsidiary of the company has acquired smart irrigation pioneer ET Water, and the company says that after this acquisition, the company will be able to scale up its operations in the US geography. Back to you.
Okay, Sonal, thanks a lot for that. Ekta's back with us. Of course, there's some news on Alchem as well.
Well, yes, in the past couple of days, we've seen that the FDC ban has come through, fixed dose combination ban of over 320 drugs by the government. So while this is, most of the companies have factored in the ban since 2016 in terms of sales and in terms of producing product extensions, etc., we understand that Alchem could be one of the companies that could still be negatively impacted. They have around 110 crores in terms of sales, which could be impacted for them under their Tanzim brand. So it is expected that they will, get in product extensions, etc., but there could be a negative in terms of sentiment.
Okay, thanks a lot for that. Well, let's do a quick recap then of our...
Saridon is one of the medicines which has been banned. It was, I used to take that when I was growing up. So
oh no, you have to be a bit careful
now. No, it's okay now. Now I've moved on from Saridon.
All right, well, let's see how that goes, how that plays out. But for now, some of the stocks that have positive news flow this morning: Sun Pharma, Spark, BPCL, Voltas, Engineers India, NBCC, SBI, Maruti and Jain Irrigation. While stocks with negative news flow: Bank of Baroda, Federal Bank, Shriram Transport and Alchem Labs. So, just keep an eye out on that. But Ekta just spoke about that big boost for Sun Pharma and Spark. The US FDA has approved their eye drug, Xelpros, from the Halol facility. Nimish Mehta of Research Delta Advisors joins on the phone line to assess the impact. Nimish, what do you think the revenue size of Xelpros is, and what kind of benefits do you think this would have for Sun Pharma? And also, it does negate the concerns that prevailed on the Halol facility. So, do you think that would mean an incremental upside on the stock in the near term?
Yeah, so first talking about the product Xelpros, I mean, it's actually a latanoprost without a preservative known as BAK. And latanoprost, as we all know, was kind of the most popular drug for glaucoma worldwide, definitely in the US as well. Now, latanoprost had a problem of, it was coming with a preservative, again, known as BAK. And that preservative used to cause irritation in the eyes. So this product, Sun Pharma's product, latanoprost, Xelpros, is actually latanoprost without BAK. and that actually itself is a good positive in the sense that it can give you the same efficacy of latanoprost, but without the irritation that it causes otherwise with the usual latanoprost. So to that extent, this is an important product, and also the fact that this is the second product in their ophthalmic portfolio that is getting approved, and Sun Pharma has already invested in creating a front end for the ophthalmic marketing in US. So all in all, it's a good product, and the potential sales, I mean, the company has not been guiding too much, but I think more than just about $50 million is what they are guiding for, if I'm not wrong. But our understanding is that it can be actually much more than that, because back-free version of other prostaglandins has been selling at a much higher sales in US. So Travatan Z is another product which is actually a back-free version of Travoprost, and it is actually much higher in sales. So it could be anything. I mean, it's definitely $50+ million is what we can say as of now.
Okay.
on the, yeah, sorry.
No, good morning. I was just asking, your view on the stock after the recent move. It had a big rally and then some correction after that inspection and some observation on Halol facility. So your view on the stock?
I won't be able to give you any price recommendation and all that, but I can tell you that on the longer term, this our view is pretty positive on Sun Pharma, and the recent observations that we received from the Halol facility, our reading was that it was more product specific. As it is, it was a pre-approval inspection, and it was more related to the product that they wanted to get it approved. So to that extent, the observations were actually not for I would say there was no serious observation for the facility. And but I understand the market was still nervous about the fact that there was another inspection, another set of observations. So to that extent, the market might obviously give a positive feedback, in terms of the stock price, because now that clouds of overhang on Halol is kind of over.
Sure.
So,
you did mention that you see much more than $50 million as the revenue estimates from Xelpros. But from the specialty drug pipeline overall, what kind of estimates do you have over the next 2 years in the revenue stream? And how much of that you think is already factored into the price?
So we basically, over the 2 years, assuming Tilrakizumab will be launched in this month itself, we are expecting actually, more than $600-700 million, from 2 years from now, just from that specialty product portfolio. And largely will be driven by Tilrakizumab, is what we understand. I think the market is is actually not really very positive on the specialty news flow. I mean, they've not been discounting too much of that. It's very difficult to say as to how much has been discounted, but my sense is that most of the analysts or investors' peak sales estimates for the largest drug, Tilrakizumab, is about $250-300 million, and that too after 5 years. So we can understand that their estimates are, or the market is factoring a much lower than what I just mentioned as our estimate to be the sales of some specialty product.
All right, Nimish, thanks a lot for your time today. So watch out for Sun Pharma and Spark. But here's the big one to watch out for over the weekend ahead of the Prime Minister's economic review. Top government officials say they are vigilant and will act when appropriate. Shirin Bhan is here with a check on the key issues. What do you, Shirin?
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target, but remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduced VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The Finance Ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out, to see how the Iran sanctions impact the oil markets, and maybe, if need be, act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Bloc hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
Okay, no need to panic. The currency should stabilize. Thanks, Shireen, for that. Let's take a quick break on that note. On the other side, our technical experts Prakash Gaba, Rajat Bose and Rahul Mohinder will join in.